Welcome back. Now time for a quick check on how regional markets opened up for trade this morning. Asian shares are steady ahead of the release of U.S. non-farm payroll data later today. That'll give clues as to whether the Federal Reserve will start withdrawing its stimulus this year. Japan's Nikkei is range-bound as U.S. shares provide little by way of trading cues as the dollar is only modestly higher against the yen. And down under, Australian shares continue to hit a 5-year peak, dragged up by BHP Billiton. The mining giant raised its iron ore production guidance as it reported record first quarter output. And to talk more with us about stocks and investments is Desmond Chua of CMC Markets. He joins us from our city studio at OCBC Centre. Morning, Desmond. Now, investors face a deluge of US data this week with the government departments reopening and with the September non-farm payrolls report due out later today. When do you see the start of Fed tapering then?
Right, with US, debt problems temporarily behind us, we are actually looking into as soon as a Fed taper, as soon as quarter one of 2014. I mean, looking at the government shutdown, it's likely to have spillover effects into Q4, and that means taper expectations are not going to happen within the year. So that January seems to be out of the picture as well because we do have back-to-back events. We do have Janet Yellen actually taking over the helm on January 14, and as well as the government shutdown deadline, which is on January 15. So that leaves us with March, on 19th of March, where the Fed meets again.
All right, now the Standard & Poor's 500 index hit a new high despite the government shutdown and the threat of default. More gains for the rest of the year?
Well, I mean, looking at recent events, we have the notion that investors are going to put less weight into each political impasse. Even market volatility is going to be less pronounced. I mean, looking at the VIX index, it has only hit slightly above 20 before looking at a one-week decline of one of the largest one-week decline that has seen it at current levels of 13. So that said, however, we do not think there is further impetus to actually push markets much higher, and we do think if there are gains in the US markets, it's going to be modest.
So do you expect third quarter numbers to surprise to the upside in coming weeks?
Well, I do think that there are potential for companies to surprise on the upside. Looking at where it is right now, we do see that some companies have actually given way better gains. However, looking at the government shutdown effects, and which is likely to feed through into Q4, I do think investors will be looking at quarter 4 guidance more than the actual results of Q3.
Among stock market sectors, will the tech industry lead the pack in the year ahead, given its strong fundamentals?
Well, there are a lot of possibilities in the tech sector, especially so far we have seen better earnings out of companies who have emphasized on things like cloud computing, on innovation as well as mobile ad space. So looking at some companies like Facebook and especially Google, which has recently hit above the $1,000 mark. So this space of mobile advertising seems to be an interesting one.
Looking at Asia, why are foreign investors stampeding into South Korea, buying up stocks for 37 straight trading days?
Well, I mean, looking into South Korea, while other nations or emerging nations are actually grappling with a widening current account deficit and lower foreign reserves, Korea is actually it's currently having a record current account surplus as well as higher foreign reserves, and that puts it in a good place when the US starts to taper sometime next year.
Corporate India is on pace to deliver its best quarterly growth in more than a year. Will that translate into a broad stock market rally?
Well, looking at India, although Indian corporate gains has been encouraging, however, if we look deeper into economic indicators, domestic demand is actually waning, and we also look at a widening current account deficit. That is not very encouraging, and also plus the fact that there are some long overdue reforms that are due, which only is going to happen in sometime May next year when the election takes place. So that does not bode well for India in the coming few months when talks of taper starts to make its rounds again.
Now, the Philippine stock market's gained 13% since January and more than 6.5% this month alone. What's driving the rally there?
Well, in the Philippines, we are really looking into stronger fundamentals and longer term. I mean, we are looking at a young population which is really well skilled in areas such as the IT and the customer service sector, this growth segment is likely to move into an emerging affluent class in the next decade or so, and therefore, the longer term fundamentals look strong in Philippines. And don't forget that in Philippines we are also having about 10% of its population working overseas and sending money home. So that means the diversity of its working class is actually very very well cushioned against economic troubles in regional areas.
Just one more question for you. China's third quarter GDP growth picked up to 7.8% year on year. Is the robust growth sustainable?
Well, news that China has actually made about 7.8% in Q2 was very encouraging, and it actually alleviates concerns that the global power is losing steam in its transition from an external demand model to a domestically driven one. However, if we look into its credit bubble right now, which has inflated property sectors as well as led to the emergence of banking, the shadow banking sector, that is a concern on its own, and as well as we do also look at a strong growth, or rather a strong yuan, which can actually lead to rather a slower growth segment in the export sectors.
All right, thanks very much indeed for that, Desmond Chua of CMC Markets, and that's a business wrap from me for now. Back over to Steve.